What is long-term care and how to plan for it? And why is this an important planning topic? Our population is getting older. Medical science is making a significant impact on life expectancies. The cost of care is increasing faster than the historical annual increase of overall inflation, and that can be financially devastating. 22% of people have dementia from ages 25 to 89, and 33% after age 90. It is a traumatic experience for family members who do not have the skills or temperament to assist in the caregiving process. It's a really difficult thing to be a long-distance caregiver. Medicare provides only some of the expense only after a hospital stay and only up to 100 days. I live this scenario depicted above with my parents. I have counseled many of our clients living through it with their parents. A generation ago, many of the above issues did not exist, so folks of that generation were not prepared for this. Many people now have had some exposure to long-term care, and because of this, they want to be properly prepared for it. So what is it? Long-term care is a variety of services which help meet both the medical and non-medical needs of people with a chronic illness or disability who cannot care for themselves for long periods. Care is provided in the following ways: home care, assisted living, nursing home, adult daycare, and memory care, which is dementia and Alzheimer's. Home care is care provided by a licensed home health care provider in a person's home. Assisted living may involve independent living with some level of supervised care. Nursing home is where skilled nursing care is being provided and a doctor is responsible for the oversight of care at the home. Adult daycare is respite care for a caretaker who is taking care of someone in their home who needs a break. Again, this care is provided by a licensed provider. Memory care is specific to cognitive impairment, dementia, and Alzheimer's disease. It is typically for assisted living and memory care. It is typically for assisted living and memory care facilities to be physically connected. Continuing care communities are facilities which provide independent living, assisted living, memory care, and nursing home care all in one campus. These campuses include fine dining, recreation, and social activities. The idea behind continuing care communities is to allow a resident to never have to leave the campus for whatever level of care they require. So how does it work? The common triggers used by insurance companies to determine eligibility for long-term care insurance benefits are called activities of daily living. Bathing, dressing, toileting, getting in and out of a bed or a chair, transferring, eating, continence, and cognitive impairment are the most common activities of daily living used in the insurance industry. When a person cannot perform 2 or 3 of these activities of daily living, the policyholder will probably be eligible to file a claim. Although cognitive impairment is eligible for a claim without satisfying the other activities of daily living requirements. For qualified long-term care insurance policies, in order to file a claim, a plan of care must be approved by a medical doctor as submitted by whichever agency will be providing the care. Another resource to consider might be life insurance. Some policies contain long-term care riders which can provide some benefit in the event the insured requires long-term care medical care and meets the requirement of the rider. These riders typically incur an extra charge and offer limited benefits compared to a qualified long-term care insurance policy. Other types of insurance policies offer accelerated benefit riders that allow the policyholder to access a discounted portion of the death benefit while living in the event of a serious qualifying illness. One type of accelerated benefit rider provides access to the death benefit if the insured cannot perform a number of activities of daily living or has cognitive impairment. While this type of rider is not long-term care insurance or even intended as an alternative to long-term care insurance, it can provide a resource during a serious illness, and the benefits received can typically be used for any purpose. When it comes to benefits for a qualified long-term care insurance policy, it is important to realize that a licensed provider and not a relative or someone who is not licensed provide the care for home care. Otherwise, a claim will not be paid by the insurance company. Assisted living is care provided under a plan of care is established for the client. It could be a variety of services that do not require skilled nursing care. Examples are meds, monitoring those meds, some of the activities of daily living. It's important to know that a claim will not be paid if the requirement of 2 of 6 or 3 of 6, depending on the policy requirements, activities of daily living are not being provided. For example, if one of these are being provided but not 2 or 3, the claim will not be paid. So who should pay for it? Who should plan for it? There are minimum income and net worth standards established by the insurance industry for suitability purposes when applying for a qualified long-term care insurance policy. If the person cannot afford the premiums, or they don't have sufficient assets to pay for the premiums, they will not be allowed to apply. The underwriting for these policies involve two types of risk for the insurance company to assess. Mortality risk is reviewed to determine if someone's medical history may make them a risk to not live according to the average lifespan. Morbidity risk is the statistical chance that an individual will develop a certain disease or disorder that is higher than the insurance company will want to cover. It's a good idea to have a conversation with an agent to address these possible underwriting issues before applying. A qualified agent will be able to advise someone if they should proceed with an application or not. Otherwise, everyone should at least have a conversation about how this coverage will fit into their financial plan.